So let's get into the Forex stuff. So I want to spend some time, like I said this morning, looking over the live market first, and then we're going to look at some of the markups from last week and already last night even. We'll take a look at a couple of trade ideas. First thing we have to talk about, though, if we go to Forex Factory, you can see it's a Canadian bank holiday and a US dollar bank holiday all day today. So those are two major banks that are now not open, not doing any trading. And that's why if you look through some of these currency pairs as we're about to do, you'll see a lot of sideways price action. Euro USD is actually one of the pairs that has broken out of the range from the Asian session. It's only moved about 30 pips today. If you look over at something like Euro AUD, you can see this is still trading within its initial Asian range low and initial Asian range high. So it's still trading within that sideways market kind of to start the week. Euro JPY, very similar, trading still in the Asian range. You can see the Asia high and Asia low marked off here with my indicator. So you can see it trading sideways there. Euro GBP, another one, still trading sideways, EMAs coming together, market sentiment rising from the sell zone into reset near that 50 value. That again, confirming the idea that this is in consolidation right now. Now, this is expected. Same thing here on EuroCAD. Look at the EMAs, look at the market sentiment. It's indecisive from the sell zone into the buy zone, back into the sell zone. So with that indecision and those EMAs coming together and price action still basically respecting the Asia high and Asia low, you can see there's no movement today. There's no direction. And that's because of the bank holidays. You can look at CHF JPY, Swiss franc, Japanese yen. This one's moving a little bit here with this perfect market sentiment line. It makes sense that we see this move lower, especially after Friday's shakeup here, as you can see with the news, right? So for here, in a situation like this, this can make your watch list, but you just want to be aware that if you do get an entry today, it could be a little slow. So far, this thing has only moved 30 pips. Its ADR is 55. So not a ton of movement there. CAD JPY, again, very much sideways today. Hasn't really made a move. If we look over even at Euro NZD, still trading within the Asian range here. Not going to do anything with that. GBP AUD, still trading within the Asian range here. Market sentiment from excuse me, from sell zone into buy zone, now coming back down into the sell zone. So just indecision. GCAD, same kind of thing here. Market sentiment swapping now from buy zone into sell zone. And you can see EMAs tight together, trading within that Asian range still. A lot of consolidation across all these pairs this morning. GBP NZD broke out of the Asian range, but now it's back inside the Asian range with no clear direction of trend. You can zoom out. You can see it's basically trading sideways from the news candle on Friday. You can see this big NFP candle right here. GBP USD, again, it's interesting. This is another pair that's out of the Asian range, but really not moving too much today at all. And it's a tough trend to identify because market sentiment is indecisive and the EMAs are indecisive. The higher time frame EMAs are looking bullish, but these lower time frame EMAs have been bearish since the start of the week. So nothing on this didn't make my watch list. Now, GBP CHF is one of the pairs that did make the list today. Very few pairs on the list. You can see very few pairs are flagged, but this made the list this morning because market sentiment is perfect in the buy zone. EMAs are clearly bullish. 800 EMA is below, 200 and then 50 EMA on top of that. And now it's already out of the Asian range, now just breaking for a new high a few minutes ago. This probably will continue higher. If we were to trade anything today, we would be looking for entries here. This could be a lot better just for that candle formation not coming off the 21 EMA. It's close. And also with this candle formation, if you box off Friday's resistance zone here from Friday's high, we really didn't break the resistance zone. We're just testing the top of that zone. So for me, this is something where we'd like to see it get above that price of 126.85 and then a retest of that 126.80, 126.85 price level for us to then move higher off of. So GCHF is definitely something that we're going to keep an eye on as the morning goes on. I wanted to show you here GBP JPY as well, swapping market sentiment line, right? Price action still trading within the EMAs, or excuse me, within the Asian range, coming between the 50 and the 200 EMA, and also respecting Friday's high very well. 1, 2, 3 times. So just no clear trend. These are days where it's very important to not lose money. There's news days where we have high impact news that'll shake up the market. And then there's bank holiday days. These are like the two most important things that we have to pay attention to only because it can help us avoid choppy trades. If we get caught taking too many losses, even if you have a really great strategy that wins a lot, you're not going to make money. So it's important to have language and have a system that helps you avoid when choppy markets are clearly present. Not just using the market sentiment line to identify that, but also looking at the news. And like I said, specifically today, the bank holidays can help us just understand why the market might be a little slower, why it might be a little bit choppier. And in that chop, for me, there's no money to be made. I know some guys like trading in the range. It's just not that way for me. Taking a look at USD CHF, this is out of the Asian range, picking up a little bit of a trend here, as you can see. But if you go back to last week, it's kind of counter trend the direction that we moved from Wednesday, Thursday, and Friday. So it's maybe picking up its long trend. Nothing here would interest me for an entry this morning just because of the swapping market sentiment line. The EMAs could be a lot better. So nothing really here that piqued my interest. USD JPY, EMAs are not clean. Market sentiment line is not clean. So there was the cleanest trend of the day comes from GBP CHF. That's why this one made the list. Even there, though, like I said, because we have this USD bank holiday, I know this trade could be choppy. I know it could be slow, and that's why I'm not in it yet. We're just watching to see if it presents a signal. Even if it presents a signal, one of the rules in my trading plan is to not trade USD bank holidays. Just because those USD bank holidays, like I said, can be so choppy and can be so slow across all the other pairs. Look, it's actually kind of funny today. USD pairs are the ones out of the Asian range, and some of these other cross pairs haven't moved yet. And that's what happens when the banks are closed and there's no trading to be done. You're just dealing with, like, really, you could think of it like retail traders just trading between themselves with the banks not doing any major transactions today. So that's what we're watching here on the Forex side of things. I want to look over at the 1 hour stuff. We'll look at some swing trade ideas. I also want to go to the daily and look at some crypto stuff because I think it's important for us to do some analysis here. I know you guys are all into crypto. Everybody's into crypto. So I wanted to start incorporating that into our live stream. Are there any questions on what I'm bringing up so far? If no questions, hit the thumbs up button so I know you guys are picking up what I'm putting down. So here's an interesting article for you guys. This says a macro hedge fund investing chief expects a 42% correction in the S&P 500 to play out within a year. He lays out 5 substantial risks lurking in the market and the best way to position for the meltdown. So Kevin Smith is the founder and CIO of macro hedge fund Crescat Capital. What an interesting name. Smith has a 2,623 price target on the S&P 500, which he expects to see within a year. The S&P 500 today is at like 4,500. So he's saying we'd almost see it cut in half. A new note, he lays out 5 substantial risks, like we said. So these risks, number 1, are investor positioning. Number 2, unrealistic growth expectations. Number 3, depressed earnings yields. Number 4, most important, inflationary environment and stimulus. And then number 5, the China risk. All 5 of these reasons are why he thinks we could see a 50% pullback. So really, let's skip, I'll put the article in here for you guys if you want to go read this. But let's, oops. Nope, don't want to save that. Go like this. If you want to read the whole thing, you guys can go read the whole thing. Why won't it let me put this in here? Hold on. There you go. But really what's important here is how he's saying to position ourselves for what's coming with the S&P 500. Because, of course, we're going to stay active on the Forex side of things. Of course, we're going to stay looking for our trading in the Forex market. But I'm talking more for those of you like myself that are doing investing for the long term, whether it's through stocks, bonds, ETFs, gold, silver, whatever it is. Basically, what he goes on to say here is the firm is bullish on commodities as a whole, which they see as an attractive investable opportunity. Specifically, he says the long-term chart of silver continues to look better over time, and we believe it's poised for a move much higher in the following months. Gold is also forming a very bullish monthly candle after a major reversal. We expect these moves in metal prices to continue to gain momentum, with minor stocks leading the way. Minor stocks being gold and silver mining companies. So to this guy, and remember last week we talked about Mark Mobius and a lot of other guys, they're saying, look, this inflation stuff is coming to a head, and when they start to raise rates, when they taper the asset purchasing, we're going to see this thing tumble. And if we see S&P 500 go from 4,500 down to 2,500, people are going to be shitting their pants. It's going to be ugly. And in that moment, you'll need to know how to be positioned in order to stay alive, to keep your money growing rather than losing value. And what a lot of these big hedge fund guys are saying is we'll cycle back into commodities. I would argue that there's still something to be said about putting the money towards crypto and not leaning 100% into commodities. But I think when we start to see the stock market correct, crypto and commodities are the two C's that we're going to be focused on. What cryptocurrencies should we be buying and holding for the long run? And also which commodities are fair value priced for the long term for an investment purpose. Paul said, do you think that the S&P prediction will run across the Dow, Nas, and Russell? I think so. I don't think you'll see either of those indices be spared once the thing tumbles. You know what I mean? It's a tough position to be in, to be honest, guys, because it's like, I don't want to be bearish. I don't want to be like the guy that's always trying to call the stock market top, but it is important to acknowledge, like, okay, we've printed a lot of money. Inflation is very high. We know the Fed will raise rates. If they raise rates too fast, that happened in 2018. The market pulled back pretty hard. It could pull back way harder now because it's way more inflated, so to speak. Okay? Just an interesting take there. It will not let me send this article to you guys for some reason because the link is too